Prices of commodities have been falling sharply in recent weeks. Gold is down, oil is down, coal is down. Is this good news or bad news? Here to tell us the answer, Michael Tamvakis.
Well, it's a mixture, I guess. For gold, it was the one that caught the headlines because it came down so quickly in the space of just one day. It was bad news for the people, particularly the large hedge funds that have lots of holdings on gold. It was good news for private investors because they're the ones that rushed in order to buy cash gold, and actually they are responsible for pushing the price of gold slightly up since it tumbled down a few weeks ago. Now for the other commodities, oil, although it has been a bit weaker, it is still hovering around the $100 per barrel mark. I think the $100 is a very important benchmark. Because it has averaged about $110 to $120 a barrel, for many people it looks as if suddenly it's cheap. Still, oil is expensive, and I think there is still demand, if you like. The fundamentals are there to sustain the high demand for oil.
Does this mean that China is slowing down?
This is correct to a large extent. I think what we saw in the 2000s, where we had the commodity super cycle, is a very slow growth by the classic Western developed nations, but we have extremely rapid growth by Asian developing nations, led by China, followed by India and several of the other economies in the region. Now, China in the 2000s, year on year, it produced phenomenal growth rates of in double digits, 12%, 30%. The most recent update we've had is that the economy is growing at just below 8%, at 7.9%. And I think for a lot of people, this is the new reality, which is still a very healthy rate of growth for a developing, industrializing nation. But obviously it cannot, if you like, bring the word average growth to such a high level as it was before. Now, because China imports so many raw materials for its economy, this will have immediate repercussions and has had immediate repercussions on the demand for these raw materials. Things like coal, which China imports abundantly, iron ore, copper, all the various other base metals that go into manufacturing. The demand for all of this is slowed down, so prices are weaker. They haven't quite crashed, as was the case of gold, but it has become weaker. So I think we are having ahead of us leaner times, if you like, for the commodity market.
Of course, one possible alternative explanation is that in the economic bad times, everyone was piling into commodities for safety. Now maybe they're selling up because there's an upturn in the wings. Could this be good news?
Yes, this is a very good reasoning as well, because commodities had become very expensive from the cost point of view. So this means now that hopefully lower commodity prices are also going to keep eventually the inflation in check. So yes, this is good news for the industry. Another thing which is also in your question is that there have been quite a lot of people who don't necessarily process the commodities, they just invest as a financial asset, and they have been blamed for pushing the commodity prices perhaps higher than they ought to be. And some of these people are exiting commodities very quickly. And again, I think they will exacerbate the drop in commodity prices that we're going to see because they're looking for alternative investments right now. But I think, as I said, if we have continued growth from China, even at a slow rate, India, a few more of the Southeast Asian economies, which are very vibrant nowadays, there are very good signals coming out of the US economy, which is being built, funnily enough, on the availability of cheap domestic sources of energy and, of course, several other commodities that they produce. And if we get the Eurozone back on track again, I think over the next decade, we may not see a super cycle, but probably will settle with the higher commodity prices that we have already experienced. As an example, I mentioned the price of oil. I don't think we will see the price of oil tumbling to $20 or even $40 a barrel. It will probably be somewhere between $80 to perhaps $120 a barrel.
Michael Tamvakis, thank you very much.